our ambition is to grow this part of the world with in the APAC region, and hopefully, in the next 5 years, it might be 15 to 20% of our assets under management.
Hello and welcome to the Yields TV. Today I'm here with Laurent Jacquemin, who is head of Asia-Pacific at AXA Investment Managers Real Assets. Laurent, great to see you here today. Asia-Pacific, growing in importance for AXA Investment Managers. Tell us a little bit about the assets under management that you have there. What numbers are we talking about in terms of the proportion of the overall AXA portfolio?
Yeah, hi Leo, thank you very much. Today Asia Pacific for AXA IM Real Assets is roughly 5 billion euro under management, which is roughly 6 billion US. It's a small amount still compared to the size of our asset under management globally, which is now around 100 billion euro. So it's 5%. And my objective is to grow this part of the world. We are very exposed to the European market and very strong in Europe. Both on the equity and debt side, we are covering infrastructure and real estate. And our ambition is to grow this part of the world with in the APAC region. And hopefully, in the next 5 years, it might be 15 to 20% of our assets under management.
So, Laurent, tell me, you invest obviously in the sort of mainstream assets such as residential, office, and all that sort of thing. But you're also looking at some alternative asset classes, I believe. Hospitality, healthcare, and student accommodation. Tell us a little bit about why you've picked those asset classes.
Yeah, that's right. If I look at Australia over the last 2 years, we've been focusing on more alternative assets for two reasons. The first one is we felt that the mainstream assets being office, residential, and logistics and retail, were pretty expensive or challenging, and a lot of competition on this asset class. We felt that an alternative, first of all, there is less competition, and what we like about the alternative assets, it's less correlated to the economy, and the asset classes that are much more defensive. You can find good opportunities with long-term cash flow, which really fit our investment strategy. So if I look at what we've been doing over the last 2 years, we bought some hotels to try to follow the trend in terms of increase of tourism in Australia. We also invested in healthcare because we feel that today the government in Australia needs some support and they need some private money to support the sector. But also we invested in student housing because we really feel that Australia is very well placed in terms of education. When you look at universities in Australia, they are improving in terms of ranking in the best universities globally. The quality of life is very good in Australia. It's can attract a lot of people in the region. If I look at China, which is an obvious one, but a lot of Chinese students used to go to the US and the UK. US is very expensive. It's not the same region. It's far away. It's sometimes less safe compared to Australia. And for all these reasons, usually Chinese parents decide to send their kids in Australia, which is much closer, almost the same time zone, and most of the time cheaper. And that's what we believe, that the student accommodation sector should really benefit from this trend, especially because there is a lack of beds for students in Australia. And so long term, we are very confident that this asset class should perform. Of course, over the last 6 months, the performance have been a little bit challenged by the COVID situation, but medium to long term, we are very confident about this asset class.
Well, that was going to be my next question, actually, because obviously those sectors in particular must be struggling a little bit with this current pandemic situation. But I guess as long-term investors, you're thinking about the longer-term trends rather than this short-term situation.
Of course, the performance of the hotel for 2020 and probably for 2021 will be definitely below our expectation. But long-term, again, I think that tourism in Australia is a very strong driver in terms of business as well. We see a lot of demand for business hotels. So I'm very confident that long-term the hotel sector should do very well in Australia. Same for student housing. Healthcare is fine, and of course, because of the COVID situation, the healthcare sector, especially clinics and hospitals, have not really been impacted by the COVID. But all these asset classes over time should really perform well. And as a long-term investors, we are very confident about these asset classes.
And are there opportunities as well with, you know, sort of lower pricings at the moment to make some acquisitions?
Yes, that's a very good point. And of course, you know, in this type of volatile market, uncertainty, we feel that there will be opportunities for us, especially in the hotel space. You know, a lot of operators, especially small operators who are also owning their hotels, will be suffering. And at one point, to keep operating their business, they will have to sell their property. So we already come across a few opportunities in Japan where some small Japanese operators are struggling and they need to keep running their business. They run out of cash, and the best way for them to get some cash is to sell their asset when they are owning their property. That would be a trend that, of course, you know, we'll see globally, but we're starting that in Japan. We were introduced with a couple of opportunities in Australia as well. But as usual, you know, when there are uncertainties and volatility like that, it would also generate some opportunities. So we are tracking this type of situation.
And in Japan and Australia, which cities are you investing? I noticed you made an acquisition in Hiroshima recently. Why Hiroshima?
So why Hiroshima is, you know, now when you speak to people and tourists, when you say, you know, you're visiting Japan, what is your plan? Usually people are going first to Tokyo, of course, then they go to Kyoto, and you see that the third destination they pick when they go to when they come to Japan and they spend at, you know, I would say 10 days to 2 weeks, it's Hiroshima. It's, you know, now a region which is, you know, very well visited by tourists, and there is a lack of you know, I would say international standard hotels in Hiroshima. You can find a lot of Japanese style limited services, but not so many hotels that are really suited for international tourists. And that's why we invested in one hotel in Hiroshima, which is managed by international brands, with room size, which is usually, you know, 10 to 12 square meter for Japanese operator. When it's an international operator, you see that the room size is 16 to 20 square meters, which is a little bit more in the standard of what you find in Europe or in the US. And that's why we strongly believe there is a lack of this type of product in Japan. And that's why we decided to invest in Hiroshima.
Fantastic. And in Australia, which cities do you see the most opportunities at the moment?
Well, we're still, you know, we're very focused on the East Coast, focusing on Sydney, Melbourne, and Brisbane. We look at, you know, Canberra sometime, and one of the hotels we bought was in Canberra because, again, there is a demand because of, you know, all the public needs in Canberra. And more selectively, we look at some opportunities in Perth. But I would say our, you know, main focus is really on Sydney, Melbourne, and Brisbane. So
far, you've focused your investments on Australia and Japan. Any thoughts about expanding out into any other countries in the region?
Yes, sure. You know, of course, you know, over the last 3 years, we decided to really focus and consolidate our position in Australia and Japan. We consider these two markets as, you know, stable market and, you know, deep enough for us to find good investment opportunities. And that's where we have team on the ground. But going forward, we are monitoring, you know, a couple of other markets in the region. As I say, you know, the APAC region is a key focus for us, not only in terms of growing our assets under management, but also in terms of capital raising. But if I look at the investment part, we are monitoring markets like South Korea. I feel that, you know, the South Korean market is becoming much more institutional. You can now be, you know, you can find some core long-term investments. And, you know, I've been tracking the logistics market in South Korea. And, you know, we have some well-advanced discussion with potential partners there. At the same time, we are also looking at China. As a global investor, we feel that we can't ignore China. It's a massive market. So, you know, and when you look at the growth in China, it's pretty amazing. And we are also closely looking at China as a next step for investment. Of course, not an easy market. You need to define the right strategy, find the right partners. But it's a fascinating market in my view.
Sure. And sustainability is getting a lot of headlines at the moment amongst the investment community. Increasingly, ESG is a key sort of priority for investors. Where does ESG and sustainability sit within your portfolio or your criteria for making an acquisition?
So ESG is really a key part of our investment process. Each time we are investing in a building, we want to make sure that at least we can upgrade. If the asset is not environmental friendly enough, we can upgrade the asset, and that's a key part of our analysis. If we find out that it will be very complicated to upgrade from an ESG point of view the asset, usually it can be a reason why we turn down or we do not approve this asset. But with this alternative class, again, we are also focusing on the S, on the social part, whether it's student housing, it's part of, and the impact of from a social point of view of student housing is important. We need to find space for this student to live. Healthcare is the same. Investing in hospitals, investing in nursing home is important from a social point of view. Hotels, and so all of that is important. In residential, we are very active in the social housing space, again, to comply with the S part of ESG. So for us, ESG is very important, of course, from an environmental point of view, but also from a social point of view.
And looking forward for the rest of the year and into 2021, what are your key plans and goals for this year?
That's a very good question. Of course, in terms of investment guidelines, we slightly change our focus. As I say, we've been focusing on hotels for the last 3 years in the region. I think we'll probably slow down a little bit and wait for opportunities. I think our main focus will be on residential, and we recently closed 2 transactions in Nagoya, which is the city on which we have a strong conviction, because the demographics are still positive in Nagoya, which is not the case everywhere in Japan, but also because the economy is pretty strong. By 2028, there will be a train coming from Tokyo to Nagoya, and it will take 40 minutes, where today it takes 1 hour and 40 minutes. So it will be a huge improvement in terms of connections between Nagoya and Tokyo. But we'll also be keep investing in logistics, because it's an asset class that, of course, benefit from the situation today with the e-commerce, with what's happening with the lockdown. We see that the logistics demand has definitely increased. There is another asset class that we want to keep investing in is data centers. That's one of the key asset class that benefited from the situation. Of course, during lockdown, the use of Wi-Fi and getting access to the information was very important. And we saw that the data centers operators really needed more space. So we have a significant exposure to data centers in Europe, and it's been very successful. And we want to replicate that in the region in Asia-Pacific.
Obviously, lots of opportunities there around the region for you to be exploring. We look forward to hearing more about them as things develop. But thank you very much for joining us here today. That's been a very interesting look at AXA Investment Managers' real assets business here in Asia Pacific. So, Laurent, thank you very much for joining us today.
No, thank you. Much appreciated. Thank you.